Everyone, Double P here and welcome. So in today's trading session, I attacked the SPY once again, and I get a lot of questions. Why am I always attacking the same security day in and day out, week in and week out? Well, I mean that depends on how you want to look at it. My mentor, who's a billionaire in this space, in the trading space, for about 15 years, all he did was trade one instrument, one financial instrument. The reason why you do that, and the reason why he did that, is because he got to know the instrument inside and out. So he slept, eat, shit, lived, breathed that particular underlying that he traded. So he knew all the nuances to it. He knew all the catalysts to it. He knew all the news to it. That's why he's a billionaire in the space. One of the reasons why he's a billionaire in the space. So, you know, first and foremost, the capital that I put into play is for the positions that I want to trade. I'm very familiar with the SPY. Yes, I've been torched and burnt on it. And yes, I've made a ungodly amount of money on it as well. So when you're starting out, it's very imperative that you follow the program, you follow the methodology. When you are comfortable and you are on your own and you are highly profitable, you can trade whatever you would like to trade. For me personally, I'm very experienced. I only trade a handful of equities, underlines, and one of them is the SPY. I mean, I'll trade NVIDIA, I'll trade Apple, I will trade AMD, I will trade a few other positions. So it all depends on what you want to do as an individual. So as you see right here, I sent out the position to my guys at 9:36. It was the 381 strike put for $1.43. So as you can see here, let's go over here to 9:36. That's when I sent out that candle, right? So you got to forgive me here. I'm still in this trade. I'm in this live trade right here. So I got to monitor this position and watch it. As you see right here, I'm drawing out my price action levels. So I want to make sure that when it breaches my resistance, I'm out of the trade. So you see that right here, 6,600. That's on a different put position that I just took, 382. So my guys are very wildly profitable today had they stayed in the trade. And you should stay in the trade because I've taught you how to stay in the trade. So you see my account right there. It's live account, real account, trading in real time. Stock is in real time. Amex, New York Stock Exchange, NASDAQ, all real-time feeds. Equity options, real-time. Futures and futures options, all real-time feed. Forex and others in real time. So real-time feed right there. So I'm going to be shortly Xing out of this position because it's going to be hitting my resistance at 380.94. So you can see it right there, 380.94. That's my resistance because it just broke that leg. That leg went down with the algorithms right here. Then it popped back up for this next leg, and I'll draw it for you shortly if my resistance is hit. So that's the stop out. So it looks like it's going to breach it. So I'm just hanging tough and waiting, because that's a position that I just don't want to give up today. This market is moving extremely sluggish, really slow, as you can see. So I have to be very mindful of what I'm doing with this particular position, with my second position. And I'm out. Because you can just see the reversal right there happening right there. That was on a 5-minute reversal, and I lost a lot of slippage there, even though the market is super slow. Lost a ton of slippage there. So that's the reversal right there. You can see right there, 2, 4, 5-minute reversal off of the low, and it always happens off of the low. There's always going to be a bounce right off of the low, right? So let's get into the lesson of what I wanted to show you, which is going to be this right here. So let me move this over here and let me try to open up. And I may take this trade again. I may not. All depends. So what's the first thing we always do? Well, the first thing we always do is we always draw the box, right? So you see, so let's come over here and let's draw this box so that you see it. You're probably going to ask me, what is the box? The box is volatility. The box is support and resistance. You can see the price action levels right there. The box is price action, and the box is volume. So if the equity, ETF, underlying security, stock, whatever, futures, product, whatever you're trading, it opens up inside of this box, we have two different options. We can either do a defined risk trade, which is a spread, or we simply don't trade in this because this is considered the death zone, because whatever is trading will bounce back and forth within this, and we kind of don't want to be chopped up in and out of this. If it opens up under the box, under this right here, then we tend to go short, right? We tend to take a short position because it's going to go short. If it opens up above the box, then we tend to go long because it's going to be a long position. The caveats now, if it opens up way under the box, like right down here, like literally like $1.50 or $2 under the box, there could be a reversal. It could go down, but then again, it could turn and try to fight its way back up into the box. Same thing if it opens up way too high above the box. It's the exact same thing. It could turn and then try to drop right back down inside of the box. So that's why we wait, right? So when did we get the trade today? I took the trade here. We're looking at 9:36. And then you see the little reversal right here as soon as the trade came out. And then that was the high of the day right there so far. And then it just ripped and it staircased down and petered down inside of the box and then through the box. So had you stayed in that position, you would have been rewarded, right? Because you can see it right there, up, down, down right here. So right around there, that was 10:07. That was what time was that? That was closed at 381.87. So that was a position that you could have took with the trade that I sent out for you today, and you would have been all right, because at 10:07, that's when I told you guys and girls to get out of that trade, right? And then you seen what happened there, because that was one of the lows right there. Then it just all of a sudden turned and ripped. You can see that candle formation, two white soldiers, inverted hammer right there. So let's open that up so that you can see it. on that particular movement here. This is a doji right there, dragonfly doji, and that's it is bearish and bullish. But look at the configuration here from this lower top right here, spinning top, two white soldiers, and then that's not really a hammer. That's another doji. But then it just rips the configuration and it just moves up and it staircases up, right? So that's the move right there that you have to look at. And then from there, where you just saw in the trade, to where it is right now. So very profitable position. And if you're wondering what else am I looking at, well, this is what I'm looking at as well. These are the positions that I'm looking at. I want to have an eagle's eye vision of the entire marketplace. So when I have an eagle eye vision of the entire marketplace, I know what's going on. I know where the positions are, and I know what has to be done. So when you're following in this trade, that's what you have to do too. You have to know what's going on with the side of this trade right here. So that's why I have this screen up. It gives me the eagle eye view of the entire marketplace, right? So if you're wondering, this is the XLP. So that's the product ETF. Obviously, I'm looking at the VIX. I'm looking at the bonds, the 10-year and the 30-year. This is the XLF. This is the financial ETF. I'm looking at the NQ, the SPX. This is the energy, the XLE is ETF. And then I'm looking at the transportation because I want to see what's going on with the entire marketplace, right? So that's it for today. And that's the trading session with Double P. Hope you enjoyed the trading session. I hope you understand and know why you need to look at. So if you're wondering, let me draw out the channels here for you. Let me draw the channel here because this is what I look at. I don't pick the trades. The algorithms do everything. I just follow the algorithm, right? So that's the channel right there. That's one channel. You can see what the algorithms are doing. And you just simply walk the stock down, right? As you've seen what I did. And then let me remove this. You want to see the next channel? Here's the next channel, right? Tight channels, what the algorithms are trading in. Because it's a very sluggish, slow day, there's a channel. That's the first line of support. That's the second line of support. And that's the third line of support, which is the support and resistance for price action, right? So this is support number 1, support number 2, support number 3, right? You see that this is low level consolidation. They're inside of that channel. They just walk the position up. Low level consolidation, broke out of that channel. They're in this channel right now. There's support right there. Come over here. Let me draw out resistance for you because it's 1, 2, 3, 4, 5, 6, 7, 8, almost 10 minutes. That's resistance. 381.26 is resistance. That's support. 380.94. That's your channel, right? So that channel is now busted. I could leave it up there, but I'm going to remove it. So now I don't have a channel. The algorithms do not have a channel right now. The algorithms are trading back and forth inside of a box, right? So that's why I don't take any position. I don't take the trade because it's inside of that box right there. Sorry, right there, resistance, right there, support. Last 10 minutes of trade. I just sit there and I watch it. Same thing on the ES mini, right? You can draw it out. And on the SPX, same thing. Resistance, support down there, right? So resistance, support right down there, right? Resistance, support right here. And now it's breaking out. because you can see the money flow oscillator has now started to move bullish, coming from a bear position, and it is right there. So that's it with double P. Hope you enjoyed that trading session, live trading session, and as always, we always look at the news as well, right? So I'll see you in the next trading session. Take care, everybody.